As we've been reporting, European leaders are going to turn up the heat on Greece's prime minister. They've summoned George Papandreou to the site of the G20 meeting in Cannes. And France's President Sarkozy plans to tell Papandreou that there is no alternative. Greece has to impose the budget cuts called for in the most recent bailout plan. Joining us with some perspective from London is Papasavvas, a fixed income and currency strategist at Investec. Thanos, welcome to In Business. Democracy is very messy for the financial markets. What do you expect Papandreou and the Greek people to do?
I think it was a very gutsy call. I also think it was the right call. It was the right thing to do. He's basically saying to the people and also to the politicians within Parliament, we either go in this together, we know the difficulties we're facing, the austerity program, but we either go into this together united to deal with the situation, or if you want to take on the alternative scenario, then you'll have that responsibility if we were to exit the euro. It was a very brave call for Mr. Papandreou. Obviously it's risky, but I think it will be beneficial.
Was it really a choice, or was it a forced decision here? I mean, that headline overnight that the Prime Minister approved changes to the nation's military caused some concern about the level of opposition that they're experiencing within Greece to take this next round of austerity.
Yes, there is. There's very strong opposition, and we've seen the continuing revolts of people across the various strata. And this is, I think, what is making Mr. Papandreou's job quite difficult. On the one hand, he cannot accept the negotiations. He cannot take the money from the EU, from the Troika, and then decide not to pursue with the strategies as had recommended. I think this is very honest to call this referendum or this discussion earlier than the actual transfers of funds.
So can we expect a disorderly default or a default?
I think still the probability of a disorderly default was quite small. I think that has increased over the last 24 hours, but we still expect that to be a sort of a smaller probability. The most likely outcome is still for some orderly default as had been planned, whether it is via Mr. Papandreou or through the coalition, a new coalition government, or possibly the leader of the opposition, Mr. Samaras. Whoever is to get the next election, if there is an election, then they would probably have to re-accept the current agreement. I don't think there's any willingness from the EU to renegotiate the terms.
Tomorrow, the ECB will not only have a rate decision, they'll also have the first real public address from their new head, Mario Draghi. How is he going to address the situation, and how are you preparing for that?
We believe that Mr. Draghi will continue with the view that we're separating the interest rate decision from the market purchasing decisions. So interest rates, we believe, will be remaining at the same level, and that the ECB will continue the purchases of the peripheral bonds, especially Italian bonds, as we've seen over the last day, given the elevated risk in the markets.
So you're positive on the euro, the dollar, and Asian currencies versus the Swiss franc?
That's right. We maintain the overweight position on the euro, the dollar, and Asian currencies.
All right, Thanos, thank you for giving us your perspective. Thanos Papasavvas joining us there from Investec in London.